Okay, Assalamu alaikum and good night. This is Mustafa Mirchawala from Mirchawala's Hub of Accountancy, and today's our objective of this class is to discuss some OT cases. In the previous revision day, we discussed some MCQs. We have already recorded. Kindly switch off your cameras, please. Kindly switch off your cameras, please. Okay, so kindly switch off the camera so that otherwise the recording will be disturbed. So today we are going to discuss some OT cases. I hope you all are working hard and you all have made your study plan and you are working according to your study plan. Okay, right? Let's move on to the first question. The first question is related to CGT. Now, few things you must know. Normally, this is the examiner practice that in section B there are 3 OT cases. In section B, there are three OT cases. There are 3 OT cases. The first one normally comes from CGT. The second one is from IHT and third is from VAT. This is the normal practice, but yes, examiner may change it. This is a normal practice. Okay. And one more thing. In OT cases, if there are 5 questions, for example, normally it's 5 questions. And in one single question, you may get true, false, like 4 options in one question. And if you do only one question, one part wrong of that question number 1, you will get 0. You won't get 1.5, you'll get 0. So OT cases is a dangerous area. If you do a little mistake, you will get complete 0 out of 2, 0 out of, not 0 out of 10, 0 out of 2. That MCQ will be marked as 0 if you do a single mistake in that, right? So be careful. Now, the next thing is question number 1. Nim and May Lom are married couple. They dispose of the following assets during the year 21-22, 21 and 22. Okay. Now, on 30th September 2021, May sold a house for 186,000. This is the disposal proceed, DP. You call it proceeds or you call it disposal proceed, whatever you want to say. The house had been purchased on 1st October 2010 for 122,000. This is the cost. So the cost is given, DP is given. Cost is given, DP is given. You can simply calculate the gain. Now, throughout the period of ownership, the house was occupied by Nim and May as their main residence. Okay, this is PPR. This topic is PPR, principal private residence relief, principal private residence relief, principal private residence relief, principal private residence relief. Okay, now, but one of the house of 8 rooms, one of the house of 8 rooms was always used exclusively, was always, see the word always used, was always used exclusively for business purposes by May. Now, what does it mean? This is the case. I hope you remember the cases. This is the case right from the day 1, right from the first day to the last day, non-stop one portion business use. Right from the first day to the last day, right from the first day to the last day, non-stop one portion business use, non-stop one portion business use. Give me 1 minute. Give me 1 minute. Okay. Right from the first day to the last day, non-stop, this portion is business use. That means we didn't not just for one single month. Not just for one single month we use this for private purpose. So this gain will be 1 upon 8. 1 upon 8. See, total 8 rooms and 1 room was used for business purpose. So 1 upon 8 will be chargeable and 7 upon 8. 1 upon 8 will be your chargeable gain and 7 upon 8 will be your exempt gain. 1 upon 8 is chargeable and 7 upon 8 will be your exempt gain. Okay. So now, don't forget, this portion is 7/8 and this portion is 1/8. And what is the name of this case? Right from the day one to the day and to the last day, non-stop 1/8 of the house has been used for business purpose. 1/8 of the house has been used for business purpose, right? Now, the next thing, let me show you if there is some MCQ for this. Yes. Okay. What is the chargeable gain after exemptions arising on the sale of the house by May? Come on. It's very easy. Very simple MCQ. What was the DP? What was the DP? The DP was disposal proceed is 186. Disposal proceed, my dear student, is 186. Cost is 122. DP is 186,000 and cost is 122. Okay. Wait. So what's your gain? Your gain is, for first calculate the normal gain. What is the gain? It's 64,000. And out of this 64,000, how much PPR you will get? How much exemption you will get? You will get 7/8 exemption. 7/8 is your exemption. So 64,000 times 7/8 is 56. So yes, this 8,000 is your final chargeable gain, which is 1/8. This 8,000 is your final chargeable gain, which is 1/8. So answer is A. Answer is A. Answer is A. Okay. Right. So it was not difficult, very, very straightforward. Now the next thing. Hope you remember BADR. 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 Hope you remember BADR. Business Asset Disposal Relief. Okay. The first part was related to PPR. In PPR, you can buy your one house for residential purpose, and if you, not only you have to buy, but also you have to live. So yes, they were living for private purposes, but one thing they did bad, and that was business use. So when you do business use in your private house, in your residential house, so you will get punishment, and they get the punishment. They get relief of 7/8 and 1/8 was chargeable. Now, second point. On 30th November 2021, yes, this date falls in our fiscal year. On 30th November 2021, yes, this date falls in our fiscal year. May sold a business. See, they didn't sell a single asset, they sell a business. Business means running business. Business means running business. So yes, BADR criteria number 1. BADR criteria number 1 we can meet, right? That if you sell a running business and you have ownership in last 2 years, and you have been owning that business for last 2 years, remember? So now check it out. May sold a business that she had run as a sole trader since 1st of December 2011. Perfect. Right now it's 2021 and she has been running since 2011. So it's been 10 years. So yes, it's more than 2 years, right? The sale resulted in the following gains. See, they are giving you ready-made gain: goodwill, freehold, office building, and the last thing is investment property. Now wait. The investment property has always been rented out. Look at me. Listen. When you sell running business, when you sell running business and you have been owning for last 2 years, so you have met the first criteria and you are eligible for BADR. You are eligible for BADR, right? But now you have to check the details. Just think, when you sell a running business, just think about a running business, complete setup. When you sell a running business, you sell all the assets. When you sell a running business, my dear student, you sell all the assets of that business. So now there are some assets in the business which are used for business purposes, and there are some assets which are used for non-business purpose, like investment purpose. Yes, you have sold the running business, no doubt. But in the running business, selling of running business means you sold a business with all assets. So now with all assets, there may be some assets which are being used for business, and there are some assets which are not being used for business. They are for investment purpose. So you only get BADR relief on business assets, those assets which are being used in business. So yes, goodwill is a goodwill is a pure business asset. Yes, you get all customers because of goodwill. So it's a pure business. Then freehold office building. Yes, normally buildings are used for business purposes if the examiner is silent. But yes, investment property is a property through which you earn rent. Investment property is a property on which you earn rent. See that it is written, and you have given on rent. So this is not a business asset. So you will only get BADR on 80 and 136, these two. 80,000 and 136,000. You will only get BADR on 80 and 136. 80 and 136, don't forget. Even if you have taken my lectures in my normal class, I teach this issue in detail in CDT. Now, also this is the next area. Also on 30th November 2021, this is a separate thing. Made realize a gain of 45,000 on the sale of 10% shareholding. Now shares. You remember there is one more way. For BADR. What was that? Let me count you. You sold shares. You must have more than 5% holding in that company. That company must be a trading company. You are the employee of that company, right? And you hold the shares. You satisfy all these conditions in last 2 years. That means minimum 2 years of holding period for these shares is must. Now let's do it. Let's check the. See, 10% holding means more than 5%. 10% means more than 5%. Yes. Which she owned for last 5 years. Yes, this is also more than 2 years. We owned the shares for more than 2 years. It's a trading company. Excellent. Then, which may has worked in part-time. Yes, part-time job is also job for last 3 years. So yes, if you see, we have met all the requirements, of shares route. We have met all the requirements of shares route. We have met, right? Okay. So yes, this 45,000 gain will also qualify for BADR. This 45,000 will also qualify for BADR through shares route. Through shares. Hope you remember, use your brain. Through shares route, this will be qualified, and this will be qualified through running business. So 80. Yes, one student is asking, investment property will be normal gain. Yes, it's normal gain. So now on how much gain we'll get BADR? We will get BADR on 80,000, 136,000 and 45,000. We will get BADR relief on 80, 136 and 45. 80, 136 and 45. 80, 136 and 45. Okay. Now giving you 30 seconds to read it. Take your time. Take your time. Okay. No need to calculate tax, just you need to. So 80, 136 and 45. Read this. How much gains? Question number 2. How much gains arising on the disposal of business? Yes, the first route. And shares by May on 30th November 2021 for business asset disposal relief. The answer is 2. It was 216 or 216. Tell me, did you add? It was 261. Yes, thank you. It was 261. It was 261. 261, my dear students. It was 261. Okay, next. Now, husband Nimlom. The wife was Maylom, and husband name is Nimlom. Husband name is Nimlom. Okay. Now, on 20th July 2021. 20th July 2021. Yes, this date falls in our fiscal year. This date falls in our fiscal year. Nim sold 10,000 ordinary shares. Yes, 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 yes. Nim is human being, human, and selling shares. So you remember the matching order rules. Whenever Whenever individual sells shares, we need to calculate gain using matching order rules. Now, and for matching order rules, this date is very, very important. For matching order rules, my innocent students, this disposal date is very, 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 very important. Hope you remember. Now, NIM made the following purchases of shares in Kapuk PLC. Now, these two shares are bought before the disposal date. Use your mind. These two shares, 8,000 and 6,000 shares, were bought before the disposal date. So whatever shares we buy before the disposal date, they go in the pool. But yes, see this. This is 24th. Some shares are bought on 24th July 2021. 24th July 2021. Now wait. What was the matching order rules? It was that there were some steps. Number one, same day purchase. Number two, following 30 days purchases. Okay. And number three, shares from pool. These were the three steps. Hope you remember. Number one, same day purchase. There is no same day. This first, remember this date. See, disposal date is very, very important. So on disposal date, there is no buying. Okay, so first step is irrelevant right now. What is the second step? Following 30 days. So our disposal date was 20th July. And we bought shares in next 30 days. Yes, this one. So my dear student, look at here. Total shares we sold were 10,000. So from 10,000 shares to the 2,000 shares cost, we'll pick from this 24th July 2021, that is 5,800. I repeat, we sold 10,000 shares. So we need to calculate gain of 10,000 shares. Now, for calculation of gain, we need to match the cost. So how we'll match the cost? There is no same day purchase. Ignore it. Number two, following 30 days purchase. Yes, 2,000 shares are from following 30 days. 2,000 shares are from following 30 days. And then the remaining 8,000 shares we'll take out from pool. Remaining 8,000 shares we'll take out from the pool. Okay. Now, I know the MCQ. Just calculate. Just tell me the cost of these 10,000 shares. All of you start. You have 1 minute, 1 or 2 minutes. Quick, do it. There is no presentation now. There is no presentation. Tell me the cost of these 10,000 shares. There is no presentation. Do it roughly. Start, please. Okay, this is the pool. This is the pool for old shares. Like, and wait. 8 plus 6, 14,000 shares were in the pool. Okay, and this 16 and 14 is 30,600 was the cost. Now, tell me, students, how many shares cost we need to take out from the pool? 8,000 shares cost we need to take out. So you will remove 8,000 shares. Now, can anybody calculate the cost of 8,000 shares? How you gonna do it? Use your calculator. 30,600 divided by 14,000. 30,600 divided by 14,000 multiply by 8,000. This is the way you do it. It's 17. How much is this? 17,600. Okay. So now wait. in this question, the first step should be same day purchases, right? There is no same day purchase, it's 0. Second step was following 30 days. Following 30 days, there were the cost of 5,800. And then the third step was shares from pool. So how many shares cost from pool? 17,600. Okay. So this is going to be 17,600 and 5,800. 17,600 and 5,800 is how much? 23,400. Yes. This cost will be used in the computation of gain. This cost will be used in the computation of gain of 10,000 shares. Now wait, students. Now you are on the revision days. You must respond quickly. Please try to. You are not taking normal classes. You are taking revision classes. So your response rate should be quick because you have studied all these things. To be very honest, you have studied all these things. Okay. So your total cost is 23,400. Your total cost is 23,400. Take your time. Take your time. Have a look. Somebody told me 17,600. You can use your calculator. 30,600 divided by 14,000 multiplied by 8,000. 30,600. It's 30,800. Sorry. Wait. I did one mistake. It's 30,800. Sorry. It's my mistake. 30,800. Sorry. 30,800 divided by 14,000. Because I'm doing without calculator. Okay. So now it's perfect. Now it's perfect. Now see the requirement. What is the total cost of shares? What is the total cost of shares that will be used? That will be used by in capital NIMS capital gains computation in respect of sale of 10,000 shares on 20th July 2021. So it's 23,400. Question number 3, answer is C. Question number 3, answer is C. Okay. Now next one, the easiest. Now come to other information. Please, students, come to other information. Other information. Names total. Names. We are talking about name. Names total chargeable gains, including the gain arising on the sale of Kapuk, including, that means everything is included. Kapuk PLC shares in the tax year 21-22 was 450,300. These were the total gains. 200,000 of which qualified for BADR, business asset disposal relief. Okay. None of the gains were in respect of residential property. Now use your common sense. Total gains were 450,300. 450,300. There are 3 types of gain. There are 3. One is qualifying gains, one is RPG, and one is NG. One is qualifying gain, one is RPG, and one is normal gain. Right? So they are saying out of this 450,300, 200,000 is qualifying gain. So obviously the remaining gains will be normal gain because there is no RPG. There is no RPG. Okay. Now one more thing. NIM does not have any taxable income for the tax year 2021-22. Thank God. He has unused capital losses of 16,000 brought forward in the tax year 2021. So wait, unused capital losses can only set off capital gains. Unused capital losses can only set off capital gains. Now you tell me, you have 2 types of gains, NG and QG. You have 2 types of gains, NG and QG. NG and QG. Which gain you will set off? Which gain you will set off in front of loss? Which gain you will set off in front? Obviously NG. Yes, NG, because it is beneficial to set off that gain which has a highest tax rate, Okay. So this is going to be 450,300 minus 200,000 is 250,300. Let's do it. QG is and NG is 250,300. Now, less loss brought forward. Loss brought forward is 16,000. Obviously, this loss we will set off from normal gain, and we have annual exemption also 12,300. Annual exemption is also deducted from NG if there are only two gains, NG and QG. So can you tell me what is your taxable gain? 222. Thank you. Taxable gain here is 222,000. Okay. Now let's apply the tax rate for CGT. Let's apply the tax rate for this 200,000. For this 200,000, this is basically QG. So for QG, a flat tax rate of 10%, which is, and for NG, it's 222. Tell me, for NG, the rate should be 20%. Very good, because the first band is totally consumed by QG. The first band, which is 37,700, is totally consumed by QG. So you write 20%, which is 44,400. So final answer will be 64,400 is your total CGT. 64,400 will be your total CGT. Okay, good. D. Question number 4, the answer is D. Question number 4, answer is D. Okay. Now, question number 5. Question number 5. NIM has a number of assets. NIM has a number of assets which he is considering disposing of in the tax year 22-23, next fiscal year. They are planning for. Which of the following statements are incorrect? Okay. So we have to pick the wrong answers. Incorrect answers we have to pick, not correct answers. Now, the transfer of a 2% shareholding in an unquoted trading company to his wife, from husband to wife, husband to wife, husband to wife, husband to wife is no gain, no loss. Husband to wife is no gain, no loss transaction. Remember, which is valued at 80,000, which was purchased for 30,000. All story is useless. Will not give rise to a chargeable gain. This is true. This is true. This is true. But unfortunately, we have to pick the wrong answer. Unfortunately, we have to pick the wrong answer to this point number 1. Point number 1, I want take on point number 1 now. The sale of antique table. Antique table. Table is tangible, movable property. So table is chattels, and antique chattels we have to apply. For antique chattels, we have to apply 4 cases. For antique chattels, we have to apply 4 cases, and this is case number 1. See, selling price is less than 6,000 and cost is also less than 6,000. So when selling price and cost both are less than 6,000, then no gain, no loss. No gain and no loss. Hope you remember. So they are saying the sale of an antique table for 5,200, which NIM acquired for 5,900. That means selling price is also less than 6,000 and cost is less than 6,000. They are saying will result in a capital loss. No, this statement is wrong. Yes, we have to pick the wrong. So this statement is wrong, and yes, in this question we have to pick the wrong statement. The gain on the sale of copyright. Copyright is not chattel. Copyrights are intangible asset. Remember, chattels are tangible, movable property. Chattels are tangible, movable property. Remember, so this is copyright. Copyright is intangible, and for copyright we have studied something different, like we deduct NBV. NBV from disposal proceed. Yes, copyright is wasting asset but not wasting chattel. Copyright is wasting asset but not wasting chattel. Use your brain. Those 4 cases which we studied were for wasting chattels. Those 4 cases which we studied were for wasting chattels. Those 4 cases which we studied, those 4 cases which we studied were for wasting, word for wasting chattels, and this is not chattel. So again, they are saying as this is acquired for 7,000, for 5,500 and sold for 7,000, will be restricted for 5 upon 3. No, 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 no. That was the case number 3 of non-wasting chattels. That was the case number 3 of non-wasting chattels. See, they are mixing up. They are mixing up. That's their technique. But this asset is copyright, so this statement is wrong. So 2 and 3 is wrong. And yes, the answer is B. 2 and 3 is wrong. The answer is B. Okay, so that was the end of your first question. Let's move to the second one. Second one is related to your value added tax. Okay, now hope you remember the meaning of taxable supplies. Taxable supplies means standard rated plus zero rated. Okay, taxable supplies means standard rated plus zero rated. Okay, we have studied this in class. Now what they are saying, Amanda runs a Guys and Dolls, a business selling adult and children's clothing footwear. Amanda started trading on 1st April 2021. Date is important. 1st April 2021 they started. Her sales since the commencement of trading have been from 1st April to 30th June. 1st April to 30th June. This standard rated is 6,500 and zero rated is 3,500. See, these two sales, standard rated is also taxable supplies and zero rated is also taxable supplies. Standard rated and zero rated both are taxable supplies. So if you add these two, so here you will get 10K per month. 10K per month. Okay. Now from 1st July to 30th September, 7,000 is your standard rated and 6,000 is zero rated. So 7 plus 6 is okay. Now then you have 1st October to 31st, 9,200 and 3,500. So 9 and 3, 12,700, 12.7K, 0.7K per month. Okay. Don't forget this. Now, these figures are stated exclusive of value added tax. Important line, exclusive. Amanda voluntarily, yes, we can. Amanda voluntarily registered for VAT on 1st of April 2021 and prepared the first return for the quarter to 30th June 2021. Okay. Be active. There are in tax, there are very small things, right? Even I will correct you one thing. There is one informal thing. This one informal thing will come in this question, which will be a learning for you, which will be one informal thing. I'll guide you this time. Now, don't read the question. First of all, go to the MCQ number 1. MCQ number 1. See this. If Amanda had not registered for VAT voluntarily, by what date would Amanda have been required to inform? Inform doesn't mean that from this day tax department will qualify, will give you registration. Inform means it's our duty. The next step is by tax department that they will make us register. That's the next step. In this question they are asking you what is the last day of inform? When is the last day of inform? Amanda have been required to HM Revenue and Custom that she was liable to compulsorily value added tax. This is the topic of historic test. Don't worry, I'll explain you. This is the topic of historic test. Now, tell me, from April, May and June, per month taxable sale is 10K. In April, May and June, for 1 month taxable sale, 1 month taxable sale is 10K. So 10 multiplied by 3. In these 3 months, it's going to be 30K. Okay. Now, next three months, sale is, you know, the limit is 85,000. Limit is 85K. Now wait, next 3 months, it's 13,000 per month. 13,000 per month means for 3 months, it's 39K. So now you tell me 30 plus 39 is how much? 30 plus 39 is how much? It's 69. Okay. Now, from now onwards, from October onwards, per month sale is 12.7. So 69 plus 29 plus 20, sorry, 69 plus 12.7. 69 plus 12.7 is still it's 81.7. Still it's 81.7, which is less than 85. So now obviously you will add one more month, which is 12.7. So 81.7 plus 12.7 will give you 94,400. 94,400. This will give you 94,400. Okay. So yes, it's not October, it's November end. At the end of November, listen my words, at the end of November. Now this is very routine things. And I'm not supposed to write January, Feb. I'm not going to make complete calendar in front of you. Please, you are mature guys. Now you are giving paper in 10 days. It's 10 days. Yes, last 10 days. So be careful. Listen. So by the end, at the end of November, the trader realized, at the end of November, the trader realized that he crossed the limit of 85,000. He crossed the limit of 85,000. Now, listen, this is the law. I'm telling you law. Now you have 30 days to inform, not 31 days, not 1 month. You have 30 days to inform. You are on 30th November. You are right now on 30th November. At the end of November, you realize that the sale cross, total sales cross 85,000. So now you have 30 days to inform. 30 days, 30 days. So from 30th November, you add 30 days. Sorry, from 30th November, you add 30 days. The answer will be 30th December. This is the answer. This is the answer, not 31st December. See, this was a technical MCQ. From 30th November, if you add 30 days, from, it is written clearly in the book, very clearly in the book. From 30th November, if you add 30 days, it is 30th December. But yes, the other dialogue is same. But tax department will give you registration title from next month. Tax department will give you registration title from 1st of January 2022. This is the game. You have 30 days to inform. Open your eyes. You have 30 days to inform. Okay. So the due date is 30th December. But the tax department will give you registration status from the next month, that is 1st January. Okay. So be careful. Thank God you attended the class. Thank God you attended the class. Now, next thing. Next thing is, yes, quarter. Let me check the next requirement. Yes. Quarter to 30th June 2021. Quarter to 30th June 2021 means April, May, and June. Quarter to 30th June, don't sleep. Quarter to 30th June 2021 is April, May, and June. Okay. In the quarter ended 30th June, she incurred input VAT in respect of sundry expenses as follows. Legal fees in connection with purchase of business premises. Very good. Yes. Let me make you very clear. For VAT purposes, there is no difference between capital and revenue expenditure. Whether you do revenue expenditure or capital expenditure, you will easily get VAT refund. Whatever expenditure you will do, you will get easy VAT, input VAT refund. Input VAT, you can claim input VAT. Yes, you cannot claim input VAT on cars. There are some exceptions. You cannot claim input VAT on cars which are in private use. Okay. You cannot claim input VAT for entertaining customers if those customers are local customers, right? And for private expenditure, you can also not claim input VAT. You cannot not also claim input VAT. Otherwise, you are buying furniture, you are doing capital expenditure or revenue expenditure. If that is related to business, you can claim full. You can claim full. So yes, on legal fees, you can easily claim full. Entertaining overseas customers, yes, specifically this name is written, you can claim overseas. Why overseas customers? Why overseas customers input VAT is allowed? Because these overseas customers will give rise to our exports. They will give rise to our exports. I gave you the logic in the class, if you remember. Stationery, yes, it's business. Now see the dodge. This is dodge. Half of which was still on hand. It doesn't matter you use it or not. Once you have purchased the inventory, that means you have paid the input tax, so you can claim it. So you can claim for all these three. Okay. Yes, full 5,500. There is a question, somebody is asking a question, what if we purchase before registration? So yes, through pre-registration input VAT they can claim. Okay. Now, see, read the question number two. How much input tax incurred on sundry expenses can Amanda recover in the VAT return to 30th June 2021? It's C. The answer is C. Okay. Now the third requirement is a little bit detailed. And little bit tricky. Okay. Assuming that the flat rate percentage of Amanda business is 9%. How much would Amanda VAT liability difference if she had claimed the use of the flat rate scheme for the quarter to 30th September 2021? So now wait. September means July, August, September, these 3 months. July, August, September. Now wait, these 3 months we are talking about. Let's go here. First of all, this is your, let me write the quarter. This is your quarter. Can you see? This is your quarter, July, August, September, right? And in this quarter, wait, see the screen. In this quarter, in the quarter to 30th September 2021, Amanda incurred recoverable input tax of 1,800. Okay. So now the way I taught you in the class, I'm teaching you right now. Wait. In this question, we have to compare the normal route and then the flat rate route. In this question, I'll show you. Yes, 2 workings. Very good. 2 workings. In this question, we have to compare the normal route and then flat rate route. And then we have to write the difference. So in normal route, wait. Normal working. First of all, you will write output VAT. My innocent students, output VAT is only calculated on standard rated sales. Output VAT is only calculated on standard rated. See, this is standard rate. So 7,000 per month, and there are 3 months. So 7,000 multiply by 3. Okay, so 21,000, and this is my dear exclusive. These sales are exclusive of VAT. So you will write multiply by 20%. How much is this? 4,200 is the output VAT, and now less input VAT. Because right now we are doing normal working. Input VAT was 1,800. So how much? is the net $2,400. Okay. So if you go with the first option, the answer is 2,400. Okay. Now the second option. In flat rate scheme, there are two things. I hope you remember the way I taught you. One is bad news and one is good news. Bad news is that you cannot claim input VAT now. Bad news is that you cannot claim input VAT. Okay. But the good news is that now you have to pay, but now you have to pay output VAT on a reduced rate. Now you have to pay output VAT on a reduced rate, output VAT on a reduced rate. Okay. Right. So you will write here output VAT. Now look at here. What is the formula? Total sales inclusive of VAT multiply by 9%. Is in this question total sales. So total sales means sum of standard rated, zero rated and exempt. Standard rated, zero rated and exempt. Look at here. So your standard rated sale was this. Standard rated was 21,000 plus you need to make it inclusive. Total sales inclusive of VAT. And yes, on standard rated sales there is a VAT. So how much VAT is? It's 4,200. Second is zero rated. Zero rated goods were 6,000 per month. This was C. Zero rated were 6,000 per month. So 6,000 per month multiplied by 3. 6,000 multiplied by 3 is 18. Now as a student you may ask, sir, please make it inclusive. Make zero rated goods inclusive. No, there is no VAT on zero rated. There is no VAT on zero rated. Okay. So see this 18,000 plus 4,200 plus 21. 18,000 plus 4,200 plus 41. It is 43,200. Your total sales inclusive of VAT is 43,200 times 9%. Can anybody tell me the amount? Please tell me. 3,888. Now this answer is according to flat rate scheme and this is according to normal scheme. So how much is the difference? Please tell me. 1,488. Very good. 1,488 is the difference. This is the answer. 1,488 is the difference. 1,488 is the difference. Got it? Okay. Now the next one is a general question. 4. Read it. Amanda submitted the VAT returns and VAT payments for the 2 VAT quarters ended 30th September 2021 and 31st December 2021 late. Now hold. In this question, the examiner is silent. That means they haven't done any crime in the past. This Amanda did not commit any crime. So first time it was September. In 30th September, she did her first crime. So whenever you do your first crime, the tax department says, please don't do it again. The tax department just give you warning. The tax department just give you warning, no monetary penalty. But now you did the crime again. You did the crime again. You did the crime again. So now what tax department will say? 2%. Now 2% surcharge. 2% surcharge. Okay. So already they have done one crime in the warning period. So 2% has already been applied. Now, if Amanda submits the VAT return and VAT payment for the quarter ended 31st March 2022 on 14th May. On 14th May, see. So yes, what was the normal time for VAT? 1 month and 7 days. 1 month and 7 days. So 7th May was the due date. 7th May 2022 was the due date for the March quarter, but she did late. So now 5% of the penalty will apply. Now 5% of the penalty will apply. 5% of the penalty will apply. Okay. And yes, your surcharge period will be extended. Your surcharge period will be extended to 31st of March 23. Your surcharge period will be extended to 31st March 2023. Now read it. Number 1, which of the following is correct? Default interest? No. You know, the default interest topic is applied on errors. Hope you remember there is an error topic of material or immaterial error. Material or immaterial, there was a limit of higher of 10,000 and 1% of your sales. Hope you remember. So the default interest in VAT, default interest in VAT is related to the topic of errors. So for example, you did some errors and you didn't disclose. So that topic is related to interest. In this topic, in this surcharge period topic, there is no interest. Leave it. A default surcharge liability period will run. Yes, your surcharge period will be extended. Your surcharge period will be extended to 31st March 2023. In any quarter, if you do crime, your surcharge period is extended to next year. A default surcharge penalty 10. No, the default surcharge penalty should be 5% now. 5% now. A late filing? No such penalty. So answer is B. Answer is B. Answer is B. Again, this was average question. Yes, recording will be available. Next, we hope you remember the topic tax point. Tax point. Now look at here. Tax point. You remember the tax point for goods. Tax point for goods are the date. First of all, there is basic tax point, BTP. BTP is the date on which you deliver the goods, on which you deliver the goods to customer. Number 2 point. If you have received advance, before BTP, so the date of advance receiving will be your actual tax point for that advance amount. Okay. Now the third thing is 14 days rule. Now you will come to the basic tax point and you see that if you have issued invoice in next 14 days, so the invoice issuing day will be your basic tax point. And if you have not issued invoice in next 14 days, so your basic tax point will become actual tax point. Okay. Now, on 1st June 2022, Amanda received a large order of 25,000 VAT inclusive, okay, for the supply of standard rated clothing. As the order was from a new customer, she asked a deposit advance. Deposit means advance, so she received advance. When she received on 5th June, she received advance on 5th June 2022. Don't forget this date. This is important. On 30th June 2022, the clothing was delivered to customer. Yes, this is your basic tax point. Your basic tax point is 30th June 2022. But see the game. Amanda sent an invoice to customer on 6th July. Yes, within 6 days. Within 6 days. Now wait. First of all, this date is 30th June 22. This is BTP. Okay. But as you have received advance on 5th of June 2022, you received advance on 5th of June 2022 of 5,000. So yes, actual tax point for this 5,000. Actual tax point for this 5,000 is 5th June. Now, next thing. Now you again come to BTP, and yes, you issued invoice on 6th of July 22. You issued invoice on 6th of July 22. So that means within 14 days. You issued invoice within 14 days. So this date will become ATP for next 20,000. Okay. See, there is the total bill was 25,000. The total bill was 25,000. Total bill was how much? 25,000. Out of 25,000, 5,000 actual tax point belongs to this quarter, belongs to this June quarter. And yes, the remaining 20,000 actual tax point, the remaining 20,000 actual tax point relates to next quarter. Now, tell me your our quarter ends here. Our quarter ends here. This is our quarter. So how much actual tax point? How much transaction falls? How much transaction falls in our quarter? How much transaction falls? 5,000. Yes, 5,000 relates to our quarter. Okay. Now, as this 5 in this question, it's inclusive. See this. In this question, this 5,000 is inclusive. So how much output VAT can you calculate on this? How much output VAT can you calculate? It's 5,000 times 20 upon 120 inclusive. So it's 833. Yes. So this much VAT you have to pay to government. This much output VAT you have to pay to government. Okay, so let's see how much. Question number 5A. Question number 5A. Now let's move to the next one that is related to employment income. Next one relates to employment income and trading income. Employment income and trading income. Okay. Amber and Sonia are friends. Amber and Sonia are friends. The following information available for 21-22. Okay. Listen. Amber has been employed by Startling Architects Limited for a number of years. On 6th April 2021, she received a promotion which entitled her the following benefits from that date. From this new fiscal year. From this new fiscal year, she is getting this much. A petrol-driven car with a list price of 21. A petrol-driven car with a list price of 21. The company paid, company means employer, paid 19,800 for the car. Now you tell me, which price we'll take for car benefit? Very easy. Which price? 21,000. Remember, I taught you before trade discount. Okay. Now, Amber was required. Amber is employee. Amber was required to pay 400 to Starting Architect as a contribution towards the capital cost of the car. Capital contribution by employee. Capital contribution by employee is deducted from cost of the car packet. Yes, Capital contribution by employee is deducted from cost of the car. So 21,000 is the cost of the car, less 400. So 20,600 is the cost of car. 20,600 is the cost of car. Now, Amber was not provided with fuel for private journeys, so no fuel benefit in this question. No fuel benefit in this question. Okay, the appropriate percentage for calculate for the purpose of car benefit is 30%. No need to work hard. 30%. So 20,600 multiplied by 30%. 20,600 multiplied by 30%. That's it. Okay, next. Private medical insurance. Hope you remember the rules. Private medical insurance, if employer is providing you medical insurance, it's not exempt. It's taxable, but how much amount? Cost to employer. How much cost? The cost which employer is bearing. The cost which employer is bearing is taxable. Okay. So private medical insurance, which cost the company 450 in the tax year 21-22. The insurance company paid 800 for Amber to have medical. See this. Wait. The private medical insurance which cost the company, yes, cost the company means employer paid 450. This is your benefit. Now if you get sick and you get treatment of $1,000 $2,000, whatever insurance company is paying you is irrelevant. Whatever insurance company is paying you is irrelevant. Only this 450 is relevant. This is just, they are making you fool. They are making you fool. Just think, if you personally go for this insurance, the cost, this will cost you 450. So this 450 is paid by your employer. This 450 is paid by your employer. So the benefit to you is just 450. Okay. And also, if you read the law, it is clearly written, medical insurance is taxable. Yes, taxable. Cost to employer. So yes, 6180 is one benefit and 450 is the other benefit. So these two are your taxable benefit till now. These two are your taxable benefit till now. Next slide. During the tax year 21-22, Amber's total salary and benefits from her employment was 123,000. She contributed 1,000 to her employer's occupational pension scheme. Yes, this is allowed expense. This is allowed expense from employment income. Wait. If employee is contributing in occupational pension scheme, then this is an allowed expense. So 123 minus 1, 123,000 minus 1,000 will give you 122,000 is your final employment income. And yes, see this 123, see this 123,000, this 123,000 includes, this 123,000 includes, this 123,000 includes all salary and benefits, everything. Okay. She also made a donation to charity 480, gift aid donations. Yes, ANI, gift aid donation, and this is 480. Paid means net. 480 divided by 80 into 100. 480 divided by 80 into 100. How much? So 600 is your gross gift aid, GAD, gross gift aid. Okay. So I have done some working for you. We can easily do 2 MCQs from this. Data. Let's see the question once. Just read it, giving you 1 minute. Now, what is Amber's taxable employment income in respect of car and private medical insurance? Yes. Did we calculate these two benefits? Tell me. 6180 plus 450. 6180 plus 450 is how much? 6180 plus 450 is how much? Tell me. 6180 plus 450 is how much? 6630. 6630. The answer is B. For the first part, the answer is B. Now, for the second point, what amount of personal allowance is available to Amber for the tax year 21-22? Easy, easy. Wait. See, your 123,000 was your normal employment income, then 1,000 is occupational pension contribution. So 122. Now wait. 122,000 is your total income. Wait, students. You will take it to side. Net income is 122. Now for ANI working, less GAD, gross gifted. Remember, we calculate 600 because it was 480. It was 480, so we make it 600. So 122,000 minus 600 is how much? 122,000 minus 600 is how much? 121,400. 121,400. Now, this is your ANI. Now, my dear student, this ANI is greater than 100,000. This ANI is greater than 100,000. This ANI is greater than 100,000. So now let's do it. Wait. Where did we solve? Oops. Okay, let me write again. So net income was 122 less gross GAD. It's 600. So 121,400 is your ANI less income limit. Remember the income limit? Less income limit. Sorry, the whole text removed suddenly. Income limit was 100,000. So the excess amount was 21,400. This is excess. What you do, you divide excess by 2. You make 2 pieces of excess. How much is this? 11? No, it's 10,700. This is 10,700. Now, what is the normal personal allowance? What is the normal personal allowance? 12,570. And you deduct this less reduction. Less reduction. This is very basic. 10,700. So how much personal allowance is available? 1870. Correct answer is 1870. Correct answer is 1870. Okay. So let's. Question number 2, answer is D. Question number 2, answer is D. Question number 2, answer is D. Okay. There is some little memory issue with my iPad, you know. Whatever I'm writing, it's removing some memory errors, right? So don't worry. Now, question number 3. Question number 3. What is the basis period? Basis period calculation. Very good. They are just asking the year for 21-22. See, what is the basis period for Sonia's trading income assessment for the year 21-22? For the year 21-22. Okay. Now, Sonia commenced self-employment as an architect on 1st of June 2020. See, this is the starting date. This is the starting date. She prepared her first set of accounts for 16 months. See, greater than 12 months, to 30th September 2021, to 30th and annually thereafter. Yes, we know. Once you set the accounting date, it remains same till end. Prior to 1st January, June 2020, Sonia had been in employment. Okay. Now wait, don't read anything. Let me write the first accounting period. And then we'll solve. It will be a revision. 1st June is 6, 1st June 2020. And 30th September is 9. I'm 9, 2021. This is your first accounting period. Now, hope you remember how to solve it. Hope you remember this is 16 months. Hope you remember. First of all, you write 1/6/2020, and you straight away your card. Take your card to 31st March. Straight away to 31st March, which is 21. Okay, so 1/6/2020 to 31st March 2021. It's almost, I think, 9 months. It's how much? 9 months. Okay. Now the second step, we don't use second step. See, you will come to the ending date. Of first accounting period, and then hope you remember this dialogue 12 months back. Ending date of first accounting period and 12 months back. So this is 39/21, and you will go 12 months back. So it will be 1/10/2020. Okay. Now write the names of fiscal year. As this is ending in 21. So this is 2021, and this is 21/22. Now you tell me what examiner is asking from you. You tell me. Examiner is asking from you for 21/22 fiscal year basis period. Examiner is asking you the basis period of 21/22. See this. So answer will be A. The answer will be A. 3 for 3. The answer is A. For 3, the answer will be A. Yes, it's 10 months. Sorry. This is 10 months. My mistake. It's 10 months. Sorry. It's 10 months. I was thinking about July. Sorry. Okay. So the next thing is now Sonia's taxable income after personal allowance for the tax year 21/22 is 45,500. See this. Trading income is 31,900 and dividend income is 13,600. Dividend income is 13,600. Don't forget that they are saying about taxable income. Taxable income means after deducting personal allowance. So now they are saying Sonia made a personal pension contribution of 1,200 net. So it's 1,200 net divided by 80 multiplied by 100. This will be 1,500 gross PPC. Okay. Gross personal pension contribution will be 1,500, right? Now, In the tax year 2022, Sonia is expecting to make a trading loss due to investment in a leave it. Now wait. First do this. How much Sonia's dividend income in the tax year 21-22 is subject to higher rate of income tax? See, they are just asking, they are not telling you to calculate complete tax. They are not telling you to calculate complete tax. They are just saying you how much dividend income will subject to higher rate tax. Now wait. First of all, your normal bands are 0 to 37,700. Your normal bands are 0 to 37,700, remember? But in this question, there is a gross PPC. In this question, there is a gross PPC of 1,500. So you will add the bands. Can you tell me what are the updated bands? The updated bands will be 39,200. 39,200, yes. So the capacity of your first band is 39,200. The capacity of first band is 39,200, right? Now, wait, you have a non-saving income and the second is dividend income. Wait, non-saving was, I think, 31,900. This is 31,900 and this is 13,600. So now this both are taxable income, right? Now you start computing tax. You start computing tax with non-saving. So first of all, this 31,900 will be consumed. So out of 39,200, 31,900 will be used for non-saving. Out of 39,200, 31,900 will be used for non-saving. So how much is left? How much is left? Can you tell me 39,200 minus 31,900? Yes, 7,300 is left. Now, with 7,300, now comes the dividend number. 2,000 is NRB. 2,000 is NRB. And the rest, I think 5,300. 5,300 will be there for basic rate tax. So 13,600 minus 2,000 minus 5,300. What else is left? Tell me. The amount which, yes, 4,300 will go for higher rate tax. 4,300 will go for higher rate tax because now basic rate is finished. Somebody told me wrong. 13,600 minus 2,000 minus 5,300 is how much? 13 minus 7,300 is 6,300. Yes, 6,300 go with higher rate. Somebody told me wrong. You got it? Please tell me. Okay, now the last question, please. In the tax year 22-23, Sonia is expecting to make a trading loss due to investment in specialized design equipment. Okay, so there will be a trading loss. There will be a trading loss in 22-23. In the tax year 22-23, she will have a dividend income of 15,000 and realize a capital gain of 20,000. This will be the capital gain. This will be the dividend income. Okay, this is, and they are expecting trading loss. They are expecting trading loss of how much? They are expecting trading loss. They have not given the amount. Yes. So now, and these two incomes will be in the same fiscal year. 15,000 and 20,000 gain. Now read the question. Read the requirement. Giving you 2 or 3 minutes. Write on the chat box. Write on the chat box, please. Tell me, please. You know, when you look at here, students, when you get theoretical question, you have to go for most appropriate answer. Did you notice one thing? Did anybody notice one thing, that she just started business? She started business in 2021. She started business in 2021. Student, look at here. She started business. See, sorry, my workings again got rubbed. There is some problem in the iPad, but you know, I showed you. Wait, let me give you one evidence again. See, she started business. She started business in 1st June 2020, and this is 2021 fiscal year. So she started business in 2021 fiscal year. She started business in 2021 fiscal year. So they are expecting loss in 22-23. This is 21-22. This is 2021. This is 19-20. Okay. Now wait. This is the first year of business. This is second, and this is third. Hope you remember early years of losses. Early years. Do you guys remember early years of losses? So if you have losses in first four, if you have losses in first 4 fiscal years of trade, first 4, that means 1, 2, 3. Yes, 22-23, 22-23 lies. 22-23 lies in first 4 fiscal year. First 4 fiscal year. So yes, you can straight away go to 3 years back. Straight away you can go 3 years back. So from 22-23, 19-20, this, then this, and this, and you can easily set off the total income. You can set off the total income. You can set off the total income. Remember, so the trading loss can be offset against total income in the tax year 19-20, 20-21, and 21-22 in that order. Yes, this is the obvious answer. Now wait, let me discuss other ones. In the tax year 2020, 22-23, Sonia could claim offset the trading loss against either the dividend income or the capital gain. No, if you want to set off the capital gain, first you have to set off total income. Remember, first you have to do total income, and the word dividend income is not appropriate. You should use the word total income. Here the word total income is appropriate. The word total income is appropriate. So what they are saying, Sonia could claim to offset the trading loss against either, it's your wish, dividend income or no. First you have to do total income and then you have to set off gain. Remember, so this is not correct. If Sonia makes a claim to offset the loss in previous tax year, it will be offset against her. No, in the previous year you can set off trading income as well as total income. Remember. Then D, if Sonia does not make a loss relief claim in the trading loss, will automatically be carried forward and set off against first available. No, for individual, if you carried forward the trading loss, for individuals, if you carried forward the trading loss, you can only set off trading profits in the same trade, future trading income in the same trade. So A, B, D are totally wrong and C is correct. C is correct. So, you know, I would like to say that these MCQs and OT cases are dodgy. And now it is, for your information, I told you in the first revision day, now you can ask the breakup from ACCA body that how much you scored in section A, B, and C. So I told you about one F8 student, F8 or AA student, and she was saying she got 5 marks or 4 marks in MCQs out of 30. So, you know, these MCQs and OT cases are dodgy sometimes. We think we are doing wrong, we are doing correct, and we go with the flow. But be careful, and please read the examiner report. Please read the examiner report, solve the mock exam, and don't waste a single minute. I made different exam technique videos as well. So please follow it and help each others, and don't misguide. Don't misguide each other. Don't misguide each other. Okay. So signing off for right now, and soon, inshallah, we'll send you the differences between individual and companies on your WhatsApp group. Take care. Take care. Best of luck.